Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Obviously, the big news is the MOI coming out between the US and Iran. Now, that's set down some sort of broad framework for terms for negotiations over the next 60 days to come up with a permanent solution. And although there have been a few sort of bumps along the road, most notably Trump sort of coming out and saying that he's ready to start bombing Iran again, dialogue seems to be taking place and there appears to be some reasonable progress made. Now that's obviously seen a bit of a reduction in the backlog of ships in the Straits of Hormuz, but the interesting thing will be is that how many of those ships actually come back and get refilled with oil and cargo, etc., and then continue to use the shipping channel. Because while it's good news, ships are actually moving there, so it's a question of getting them back and getting a more sort of normal sort of shipping routes established again. So obviously that was pretty good news out there. There was a relief rally in equities and also oil. But what is quite interesting is that the supposedly deal that's on the table looks very similar to the JCPOA that was established under the Obama administration, which Trump removed the US from in 2018 in his first term, saying it was the worst deal ever without providing any evidence. A further sort of embarrassment for Trump as well, because he's made a big thing about refurbishing the reflection pool by the Lincoln Memorial. But that now appears to come in unhinged with algae coming back into the pool, and the sort of gleaming blue that it was supposed to be is no longer there. Also quite interesting, the first Fed meeting last week under the new Fed chair of Kevin Warsh, and what appeared to imply that the Fed is potentially looking at interest rates increasing towards year end. Although Warsh declined to add where he thought rates would be on the dot plot. But the terminal rate was a sort of increase from 3.4 to 3.8. And they saw GDP sort of being relatively sort of stable, 2.2 for this year and 2.3 for next year. Inflation was still elevated though, PCE was 3.6 for the end of this year, but it fall down to 2.3 for next year. But both those readings are still above the 2% target level from the Fed. And what was very interesting as well, the sort of end statement was much more concise and really was compacted down to quite a small passage. Now on the back of that, rates are still pretty elevated in the US. That 10-year is at 450, the 2-year is 420, and the 30-year, although it's below 5%, is 494, which is still pretty high, considering the target range for the Fed funds is 3.5 to 375. And certainly gives a clear indication from the bond market of where they see interest rates heading over the next sort of 3 to 6 months. Now what is also quite interesting as well, is seeing quite a few companies announcing sort of layoffs and cuts in jobs, and that appears to be in sort of direct conflict with the latest jobs data coming out of the Bureau of Labor Statistics. But in a couple of weeks' time, we'll start to see the next round of earnings reports, and it will just be very interesting to see on the guidance there what is sort of being forecast for the next 3 to 6 months. Because supposedly the big beautiful bill should start to see tax refunds coming back into the US consumers' pockets. But certainly inflation is still elevated. You've got cost of living higher than it was sort of 3 months ago, and also gasoline is higher than it was 3 months ago as well. It'll just be interesting as well to see how much money is actually pumped into the US economy from hosting the World Cup. So as sort of mentioned, that MOU between the US and Iran has seen oil fall dramatically, currently around sort of 73.20 and change. But that's still about 20% higher than it was before the US started the conflict with Iran. And all the time you still got Israel sort of sitting there and almost looking for an excuse to continue bombing Hezbollah. Although at present a very sort of fragile ceasefire does exist. Now in the UK, obviously the big news is that Keir Starmer, the Prime Minister, has resigned, and it looks like Andy Burnham, who has just entered Parliament as an MP, will be the new leader of the Labour Party and then will become Prime Minister of the UK. Now obviously the opposition party are saying that he doesn't have a mandate to be Prime Minister and there should be an election. which is quite ironic for the Conservatives, because when Boris Johnson stood down and Theresa May stood down and Liz Truss, there wasn't a general election. And Labour still have about 3 years to go before they have to have a general election. And they have a comfortable majority in the House as well, so it is unlikely to see a general election called by Labour. Now, obviously, the falling oil prices is obviously good news for the UK. It does give a little bit of sort of help to the UK economy, but also potentially gives a little bit of scope for the Bank of England as well to be able to cut rates later in the year, because the UK economy certainly needs it. Now, in the EU, got a bit of a heat wave at present, which is obviously, reasonably good news for the start of the summer holiday season. Now, in Australia, CPI for May was down 0.3 for the month, but still having a year-on-year of 4.4. But again, most of that is sort of energy related, and also with the falling oil prices, you would expect that to fall a little bit over the next sort of 2 to 3 months, which is certainly good news for the Reserve Bank, and potentially now after those 3 hikes, the Reserve Bank could be on hold for the rest of the year. Now, here in New Zealand, a little bit of good news on the sort of consumer spending front, because certainly over King's birthday weekend, retail spending was up, which is certainly encouraging news for retail and hospitality, which has certainly been doing it pretty tough over the last sort of 6 to 9 months. And GDP for the March quarter was announced at plus 0.8, which again was pretty encouraging, although obviously it doesn't contain the full impact of the US-Iran conflict. But also as well, the December quarter was revised up from 0.2 to 0.5. So again, encouraging signs, and obviously now with falling oil prices, hopefully we'll start to see a little bit more sort of confidence come through in the New Zealand economy. And that appears to be borne out in the job ads, which was up for May as well. And year on year showed a 12% increase. Also as well, some encouraging news on the net migration numbers, which is actually positive as well. So obviously with the falling oil prices, it would just be very interesting to see at the next Reserve Bank meeting what their sort of outlook is for the inflation front. As potentially, if oil continues to fall, there may not be a need to increase rates as much as sort of forecast a couple of weeks ago. And there's just an outside chance they might not have to raise rates at all. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.